Um, Today I'm going to be talking more about the trade that I took on GBPUSD on Friday last week. Unfortunately, I'm in a shorter, but somehow there's still hope that maybe price will drop to the downside. So let's get straight into the chart so that I could just show you the reasons that I have or the little position that I have. However, when the markets open, I'll just adjust my stop to protect my capital. I opened two positions on GU. My first position was open around this price over here. Sorry, my first position was opened around this price over here at 1.34258, and my second position was when I got a confirmation around 1.34574 zone. But overall, my risk reward is still 1:2, and the risk on the trade is still 1%. I raise 0.5% because I understand IBR very much. The markets usually behave that very same way, so I've been using this strategy for a very long time. And I raised 0.5% on later on when I got a new confirmation if I drop to the downside, right? So currently, even though I'm in a drawdown, the chances of losing are quite high against me because the XY is somewhat, supporting the move.
So we have this push face. We have this push face to the upside and then a pullback, and then on the 15 minutes time frame, price created this demand level, right? And price, however, pulled back into this demand level. It might have bounced off due to maybe concentration of bias. However, really these things I do not believe about it that much. Price reacted to the zone, but it didn't tap really deep into the zone. But in the other sense, it could easily determine that if I was supposed to be available that very day, right? This is not good. I have to zoom out my chart. You can see that price created this push face down, so this pullback over here, and in here, this very zone I've highlighted. If you go to the 15 minutes time frame, you could see that there was a demand level there, right? There was a demand level. This is my own concept because I've been using this strategy for a very long time. This here is my demand level, right? On the 1 hour time frame, you could see that price actually reacted to that level, right? You see that price, even though price didn't get that close to the demand level, but it's reacted that level. We can see the rejection within the zone, that spinning body candle and that inverted hammer rejection, and then it gave a strong bullish confirmation over here. If you're going to put it into a logical sense, if there was any trader available at that time who has been trading for a very long time, he will literally take a buy around this price and place a stop below that zone, right? And then take profit somewhere very far away, or whatever that he decides to do with it, right? So at that very moment, we are looking for IBR, as I've already explained in my previous video. By the way, if you want to watch that previous video, you can check it. I've added to this video. So as I was talking about, for IBR to occur, we need a price where buyers will actually buy for. Then we will need price to actually drop and take out their stocks, invalidate their entries, and then manipulate buyers all over again, drop to the downside, giving us a very perfect entry. For instance, this very entry where we have a demand zone, the M15, price has reacted to the zone, and let's say people who are available that time might have bought at this exact same price, right? Just in case when the market opens, a candlestick trades below. Just in case when the market opens, a candlestick trades below this zone and closes bearish here, we have an IPL. So if you didn't take the entry with me, later on when that happens, when that IBR, when the bearish candlestick goes below that zone, you can also take a sell and then have your TP set at the same zone, just like me. Please don't forget to like this video and